Hello everyone and welcome to this masterclass on open banking and platforms in finance. My name is Christelle Najm and I am an analyst at CFTE and I'll be moderating this session. This masterclass is brought to you by CFTE, the Center for Finance, Technology and Entrepreneurship, a global educational platform providing finance professionals with the knowledge in fintech to thrive in the world of digital finance. At CFTE, we are training tens of thousands of professionals from leading financial institutions and tech companies on important trends like artificial intelligence, open banking, or payments. You might have heard of some of our courses, such as the FinTech course of Hong Kong University or Artificial Intelligence and Finance with Ni and Politique Technique. More than 200 experts from the best banks, insurance, fintech startups, investors, and regulators help us design programs which are relevant to working professionals in what we call for the industry, by the industry. With us today is Carlos Figueredo. Carlos is the CEO of Open Vector Limited, specialized in consultancy services regarding open banking and finance. Carlos's expertise comes from being the head of data standards for the OBIE and has more than 30 years of payments and ISO experience. Over the next 40 minutes, Carlos will take us through the emergence of open banking and platforms in finance. He will explain what open banking is, how it came about, and where it is going. Now, without further ado, I would like to invite Carlos to take on the virtual stage.
Hello, everyone, and welcome to the Open Banking Masterclass. My name is Carlos Figueredo. I am the CEO of Open Vector Limited, which is a United Kingdom-based firm. We specialize in providing consultancy services regarding open banking and open finance. And as a matter of fact, we were one of the first consultancy services out there that started to engage in regards to open banking, in educating, and also to be able to start with the first implementations of open banking back in 2017. I held the role of being the head of data standards for the OBIE, and that's where my expertise comes and allows me to speak to you today as a true expert in this field, but also because myself and through Open Vector, I have been involved in over 4 countries in the actual implementation of open banking and open finance initiatives. So not only is it all about speaking to you about open banking, but actually having true experience in having implemented this. Outside of governments and central banks, we also have financial institutions around the world that have been that we have worked with in regards to open banking. So very, very happy to be speaking to you today. And I hope you find this information incredibly useful. So as we start here, let's take a look at what we're going to be talking about. I'm going to be breaking this up into 4 primary chapters. The first one is about understanding the basics. So I think it's really important for us to talk about what exactly is open banking and be able to give you some of the briefs as to what we will be talking about and for you to understand some of those basic concepts first. The second we'll be talking about is open banking and some of the things that happened back in 2016 and 17 when this was first announced. A lot of the naysayers, a lot of the people that thought that this initiative would never happen. We'll talk about what happened, since then, and the fact that, is it a reality or not? Thirdly, I'll be talking about open finance, which is just the natural step after open banking. So let's look at what open finance means and finally take a look at what those benefits will mean for consumers. And lastly, where do we go from here? So now that we are talking about open banking, we're talking about open finance, what's the next step? Where should we be going? Or what is it that the markets are doing and where are we going to be going? So let's get right into it. And here we go. So what is open banking? So let's talk a little bit about what it is and what it's not. I think that's a really good way of looking at it. The purpose of open banking is to encourage the sharing of data. So what we're doing here is open banking was all about making sure that data, your data, consumer data, is being shared from financial institutions, primarily banks, to third-party providers. We'll talk a little bit about some of those definitions in order for them, these fintechs, to be able to take our data and to create products and services that we've never seen before, we've never had. So it's very important about this sharing of information. And I'll talk a little bit later about security and also about how consumers can control that information. It's about increasing collaboration, very important here. We have financial institutions that have had our data for so many years. It's about them being able to collaborate much more with fintechs in order to be able to create those products and services. The other thing that open banking is, it's about ensuring that we are here for a common goal. You'll see about this later on. It's really about us. It's about the consumer being at the center of everything we do. Very important to be able to always remember that the purpose of open banking is exactly that. So what is open banking not? What it's not another regulatory compliance project. It definitely isn't. This is a movement. This is not something that just was implemented by the regulator as a one-time thing and we can forget it and put it in a drawer and leave it. This is a movement that will be ever-changing. It's an initiative to favor the banks? Definitely not. Open banking was not created to help the banks or to assist them in furthering some of their products and services. Now, while banks can benefit from that opportunity, this initiative really is not about saving the banks or favoring the banks in any way. It's about creating equal competition. It's about opening the market and allowing that any financial institution of any size can compete with larger institutions in order to, once again, make sure that we are at the center of it, the consumer, and we get the benefit of products and services from all kinds of different financial institutions and fintechs, whether small or big. And another point is this going to disappear? Open banking is going to disappear. Well, you'll see later on that it is definitely not. And lastly, a movement that only covers the financial sector. Definitely not. It is definitely not only covering the financial sector. We're going to see how this is going to be able to provide a consumer with so many more options and choices, some of those things that we've just never seen before. So very happy to be talking to you about this. So let's keep going a little bit about what we're talking about. So for me, open banking really is about three key basic pillars. And I think if you can keep these three basic pillars as a clear of understanding of how the structure of open banking is, I think it'll help you pretty much to understand how it all works. Now, I've placed here, firstly on the left, data standards. Now, probably I also should have added just the overall architecture and of open banking as it relates to data architecture and security architecture, API architecture. But let's keep it simple and call it just our data standards, right? By data standards, I mean that this is the vehicle, the communication method of which financial institutions, banks will be talking to fintechs. It's a common language of which they'll be able to communicate that data. So it would be very, very difficult for a fintech or another bank to simply receive a load of files and just random information about myself, my financial position, or any other piece of information. Instead of doing that, what we're stipulating here is that we do it via a standardized language, a standardized format of which banks and fintechs will communicate. In the case of the United Kingdom, and part of my responsibility as head of data standards was to dictate what should that communication look like. We've decided to go ahead with ISO 2022. I come from an ISO background. I participated in ISO groups for many years. I was there in the creation of ISO 15022 and in the creation of ISO 2022. So very passionate about the fact that how data standards can make such a difference for us. So data standards being one of our pillars, that's how we communicate. The middle piece here is regulation. We will talk a little bit more about regulation later on in this presentation, but for me, regulation is the other key component. So by that, I mean is establishing key structures from a regulatory perspective that will ensure and we understand how the different players will and need to behave and how we will be protecting ourselves, the consumer. So regulation, very important pillar within the open banking structure. It's just pretty much dictates and allows people to understand how this will all come together from a regulatory perspective. And lastly is collaboration. Regardless of how much architecture we put, how much technical aspects we put in, how much the regulation tells us or doesn't tell us, what it tells us to do or not, at the end of the day, it really boils down to collaboration. We need to ensure that we've got a strong understanding of the opportunity, not only from a commercial perspective, from a monetization perspective, but also from a social perspective. This is a fantastic opportunity, and if we build on that, if we look at that collaboration, we are set to succeed because we'll be able to create products and services that we have never been able to create before. Like I've said, and you're going to hear me say that over and over again. Banks cannot do it by themselves. Fintechs cannot do it by themselves. If we can join and collaborate, we'll be able to create incredible different things. And we're already seeing some of those products and services today. Now, I talked a little bit about regulation in the slide before. Let's deep dive a little bit into what that means. So we have, in my point of view, three different types of regulation structures. And we can see this across the globe in different countries that have already implemented open banking. On one side, we have the United Kingdom and Mexico, which decided for a more mandatory regulation. That means that the regulator has dictated specifically roadmaps deliverables, engagement rules, etc. The entire architecture, like I mentioned earlier, technical architecture, the data standards, how we allow the consumer to provide consent, which is another very important aspect of open banking, is how does the consumer allow us to be able to extract that data, and that's through their consent, and I'll talk about that later on. All of those different aspects are covered under a mandatory regulation because they stipulate exactly what everyone needs to do, when they need to do it, how they'll need to do it, and what will be the penalties potentially for not complying to this regulation. So what are the drivers behind a mandatory regulation? Like it says here, it's about the drivers are to increase competition. And we do that again by being able to create a level playing field for everyone. It's about data protection, because here's how we stipulate how that data is to be handled and managed, how long someone can hold your data, what can they do with the data, up to what extent that information can be handled, and what can they do with it, how they have to release it, how do they delete that information, who can even have access to it. So very important about data protection. Fomenting innovation, obviously, because it pushes the banks to have to provide that data, share that information via APIs, which I'll talk about soon as well. And the fintechs will be accessing it. So definitely here's where innovation begins. And to regulate the banks and the fintechs, like I said, here's where the regulation dictates exactly what role each one of the different parties will play. The products, they're defined, and the standards are specific and detailed. That means that the regulation has dictated exactly which products or services, what type of data is to be shared, and what type of data standards, for example, are to be used. And here's where we talk a little bit about open data and closed data, transactional data versus open data like ATM information or branch information, etc. Another type of regulation that's been put in place is a partial regulation. That's an example of what happened in Brazil, or is happening in Brazil. What they've decided to do is that the regulator has certain aspects of core regulation, but they have also left it for the market to be able to come in and provide their own input, to collaborate and be able to place their own twist into what they feel should be part of their open banking initiative for Brazil. Now, what's different here is that their drivers are better collaboration, possibly, because where you have Mexico and the United Kingdom, where it's a forced regulation, and maybe some of the participants were not as keen to participate as they would in Brazil if you had a more market, not led necessarily, because that's the example that I'll be talking about Singapore, but where there's more voice on behalf of the parties involved in the Brazilian market, where they can voice more their opportunity or what they'd like to do with this initiative. Financial inclusion, because it does allow then for participants to be more vocal, to be more freely to express themselves, to participate, to engage with a regulator. And obviously, again, it really does foment innovation in a different way, as it provides, again, maybe potentially more vehicles of opportunities as we look at that regulation and how it's implemented in Brazil. The products are more prescribed than defined. The standards are guidelines and recommendations more than sometimes core structured regulation, as I mentioned, for the ones in the UK and in Mexico. Then we have the Singapore model. Very interesting model, because there it is completely market-led. While there is some potential opinion on behalf of the regulator has really stepped aside and allowed the market to drive the initiative, and for them to be able to decide on their own how they would like to implement, structure, utilize their open banking or API structures. The drivers here is potentially a competitive advantage, simply because it allows you to manage the timelines a bit better. It also does what it says here about reducing costs, because you're not structured as much on having to implement your open banking structure in a set date. So it allows you to be more flexible with your budget. A managed implementation, because you manage when you want to participate in an API architecture or not. And again, it's more bank and fintech led. Like I mentioned, it's a market led initiative. The products are varied, because it just depends on what the market wants to bring to the sector or not. And the standards are completely voluntary. It's about deciding if you're going to have a one-to-one relationship and what standard you want to use, or one-to-many. It just depends on how that's structured. Now, I'm not going to go too deep into this subject because we have so many more slides to cover, but there are definitely advantages and disadvantages to each one of them. On one side, you have the full mandatory aspect. I'm talking about more of the negatives here, or the challenges, where in the regulated mandatory aspect of it, you're forcing the institutions to participate. They may do it a bit more grudgingly. They might be more difficult for them, but it does create an even playing field. It means that everyone has to participate. The top banks must participate. And this gives us a much better aspect of competition in that sense, because it forces everyone to have to participate. In the Brazilian model, the challenge there is that you have like I said, a partial regulation, so that it means that you may potentially have the top 5 banks speaking with the regulator and being more verbal about what they would like to do. But it may not necessarily mean that the smaller banks have a voice in this. And even though in Brazil they're saying that they do have a voice, I still question whether they actually do have an equal voice as you would do if you had a fully regulated mandatory structure. From a Singapore perspective, the challenge there is, as you can see, is that because there are no real regulatory aspects, there are no timelines, there are no hardcore roadmaps. And while you may see that potentially beneficial from a cost perspective, at the end of the day, it doesn't help the consumer, because the consumer then is left for the market to decide when. So there's nobody there to actually push the agenda and to get this across in a timely manner that will, at the end of the day, benefit the consumer. So that's my take on it. There's definitely different views on this, but that's how I see it. It doesn't make the Singapore model any worse than the UK model or the Brazilian model. It's just a different approach with different aspects, and I guess we'll have to see in the next couple of years, months and years, as to how that all benefits or doesn't benefit the consumer. So some of the key definitions that I felt that you really needed to know in order to be able to continue to speak about open banking are these definitions, which are just a few, but very important to understand. In the open banking structure, there are certain players that participate when you talk about open banking. On one side, you've got the PSU, which is the payment service user. It just means us. We are the consumer. We're the PSU. It's whoever is actually making the payment or the transaction as an end customer, and that's being ourselves. Then you have something called the PISP, which is the Payment Initiation Service Provider, or PISP, and that's the actual company that pays directly from your bank account rather than using a debit or a credit card. So we allow them on our behalf to make a payment for us. And they could do it through a third party or directly through a card scheme, depending on what the structure of that payment is and what's the actual use case for that particular transaction. We have then an AISP, which is an Account Information Service Provider, or AISP here. And what they do is they allow us to see all of our account information from different banks in one place. So let's just look at that difference for a second. An AISP cannot make payments on our behalf. They do not have the right, they may not have the structure, and we have not given them permission to make payments on our behalf. An AISP, all they do is we give them permission to access our different accounts if we have more than one account, and to be able to show us under one API what that information is. In whatever it is that service that they provide. Is just basically taking our information and showing it to us in whatever structure they feel will benefit the consumer. But different from a PISP, the AISP cannot make a payment on our behalf. A PISP, primarily a payment provider, though they could potentially show us some information, but they're specifically there for payment services. A TPP is a third-party provider. This could be a fintech. It also could be a financial institution acting as a TPP. And what that basically means is that they are providing an actual service. They're providing a technical facility, whether it's an app or whatever it should be, to allow us to participate in this open banking. So you need to think about it as really a TPP being a fintech or a company or even potentially even a bank that's providing us a service of some kind for the benefit of us consumers. And lastly, and this is more for the UK, the CMA, and I'll talk about that here and there, you may have seen it, is the Competition and Market Authority is actually the authority where the open banking regulations came from. They're the ones that starting in, and I'll talk about this in just a second, they're the ones that implemented the actual regulation. Not implemented, sorry. They're the ones that wrote the regulation that was later implemented, and I'll show you that in the next slide. So how does open banking work? Let's take a look at, so now that we have a little bit of definition and just in a large sense, we've talked about the sharing data, collaboration, and regulation, how does it all work? So Primarily, the sharing of data through regulation and collaboration are key in order to be able to create products and services. So this is fundamental. So if we look at that, what we're talking about is having the sharing of information from financial institutions through fintechs, and the way that they communicate is through APIs. So these application program interfaces is what allows that data to travel from one place to another. So what we're doing here is that we're utilizing APIs and all of our architecture in order to be able to share this information. So how does it all work? It's basically us as a consumer giving consent to a third-party provider to tell them, we like your service, we like the app that you have, I'd like for you to do what you say you do, and here is my approval to do so. Then that third party will go to our financial institution, show their credentials, and be able to extract the information that's required in order for them to show that to you via the API. Now, that could be done, again, through all these different mobile accesses and whatnot, but at the end of the day, it's about being able to show us and providing us those products and services. Now, is the information safe? Very much so. The way that open banking works, and even for open finance, is based on the same international architecture that's available today. We're using international components to not only do all of the accreditation, the encryption, and all of the security checks. So that guarantees us that what we're doing is obviously utilizing and optimizing on some of the most internationally proven components out there. So very importantly to see that. To understand that this isn't something that we're doing through a new vehicle or a new structures. We're using international best practices that have been in place for quite some time and continue to evolve. So I thought it'd be fun for us to take a look at some of the things that have been said in the past about open banking and how wrong people are. And I have to be very careful about that. It's not that they're wrong. What I have found from 2016, when I first started with open banking all the way until now, it simply is about a lack of education. It's about being able to educate people more as to what is open banking, all of the different structures around it, its use, etc. I think that this is the biggest issue with open banking is the lack of true understanding of what it is. So let's start with the first one. Consumers are loyal to their brands and wouldn't consider other options. Now, way back when, this was very, very true. People were very, very loyal to their brands. But the reason why this isn't true is because today we have to look at the shift of consumers and who our client is. And then I'll be talking about that later, is understanding our client, right? If we take a look at the shift of technology and how far it's reached and gone to, right? Our consumers tell us that 78% of them would be willing to seek technology companies to provide banking services. Now that should open eyes, and I'll read that again. Consumers are willing to seek technology companies to provide banking services. That means that people are open to the idea of working with technical companies for banking provided services. Now that tells us that consumers are changing that loyalty. They're looking actually for products and services at their fingertips that is real time, quickly accessible, that's real, and that's again, there's an element there, of course, of trust. So very, very much a change. Number two, open banking has no impact on social issues. Definitely not true. Open banking is helping, once again, this is a really important point, to remove cash from circulation. So in regards to social issue, we see that open banking has the potential, and it's starting to have the potential on reducing fraud, on, again, looking at reducing money laundering or other kinds of crime like that, simply because we are able to remove cash from the streets. And this is a really important point about how it's resolving elements of social issues. So this is very important as we look at the impact that open banking has on social issues. The other part that I also have not mentioned here in this topic is the impact on social issues is about financial inclusion and social inclusion. Open banking has the potential of creating products and services not only for the banked, but for the unbanked. Really important piece here. Number three, open banking will never be of mass use. So this was something that was said back then. It'll never happen. It's just never going to be used by the masses? Well, today, 5%, and I'm talking about just the UK population, over 3 million people use open banking services. But because of the rapid pace of new payment products and services, and this is really important because of the belief and because of the use of new payment services, we're seeing, or we're expecting that 60% of that population will be using open banking by 2023. We're seeing a huge shift and increase in payments products that will certainly change that number very quickly. And this is just in the UK. Worldwide, we're seeing so many different payment companies coming up, all these different unicorns, all these different products and services, challenger banks, neobanks that are coming online and will certainly are convincing all of us to move into open banking services. A simple case of that is simply QR codes and how that's impacted us, and how QR code payments are starting to take hold of what we do every day, and just the facility, the ease of us to be able to do that, lending, all kinds of different products and features. And that's not only just on the consumer side, but what about on the B2B side? There's a whole element of customer experience, but now something called BX, which I'll be talking at the very last part of this presentation. Number 4, and the last point here, is only fintechs can access data from banks. This is something I am asked all the time, is how are we going to make those fintechs pay? Because us banks have to give all this information away, and we just give it away for free, and da 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 da. It's such a again, a misunderstanding of the use of open banking. Banks can also access this information. So banks can also access data of other banks. And if a bank can, and here's the key element, is open banking is about also breaking those traditional banking structures. Banks need to think more like a fintech, to be more agile, to be more rapid in their development of products and services. So it's not only about them just giving data away, it's also about how can they access and take that data from the sector and be able to produce products and services that will benefit them, or that will increase certain benefits of their current products and services, access other markets, access clients that they've never had before. So again, a huge misunderstanding around the use of data and how banks perceive sharing of information. Hope you found that useful. Now, let's bring this a little bit to you. Let's hopefully this will convince you a bit more. It is said that, again, in understanding this opportunity, is that more people get divorced than change their banks, meaning that they are so loyal to the bank. Not anymore. People are certainly shifting now and looking for just products and services. And here's the catch, right? And I talk about this in so many different countries where I do presentations, is how many of you have Candy Crush, or how many of you play F1 here, like I've shown in these slides, or any other game? Many of us do on our cell phones. We have all kinds of games and things, and you are more than willing to go ahead and put in a couple of pounds or dollars or whatever currency you have or work in to purchase a feature, to buy more coins, to change the color of your car, to add a weapon to your soldier, or whatever game that you play, or if you do online betting, whatever it is. You're more than willing to do it, but you don't question where that goes. So I like to ask you, who's behind Candy Crush? What's the company behind it? Who develops it? Where do they sit? Where's their office? What do they do with your money? How is it that they take your money? How do you know they're not going to take more, et cetera, et cetera, et cetera? You don't know. I would challenge anyone here. I am sure that many of you do not know. And the reason why you don't is because primarily you actually don't care. You just want to be able to play. You want to be able to buy the service. You want to buy that gun, or change the color of your car, or pour more coins into a certain game, because you just want the service. You want it now, and you want to keep playing. And that is what we see, is a shift in the consumer and their behaviors. Consumers want to be able to access information. Now, I know it's very different when we talk about Candy Crush to your financial footprint, but nevertheless, it's still the same. You're still paying for something. You're still using a financial vehicle. You're still putting your credit card down. You're still making a payment without really knowing who's behind it, because you want a service. And that is the same shift that we're seeing today with our current consumers. They simply want to be able to access anything from mortgages to lending to payment services, et cetera. They want it at their fingertips. They want it now, and they want it as quickly as possible. So now let's move on into chapter 2. I hope that that helped you a bit to understand the basics of what is open banking, gave you a little bit of a flavor of to what it all means. Let's start now looking at some of the other features. In this chapter, it's about open banking will never happen. Well, yes, it will. And let's talk a little bit about it. Where did it all begin? So open banking really started because after the financial crisis of 2008, the English regulator realized that banks were not really doing anything to create products and services at the speed that was hoped for, that they were still falling under the same monopoly, still falling under the same structures that were potentially going to create another bubble or some other behaviors on behalf of the banks that just were not helping to learn from what we learned after the crisis of 2008. So here's where the regulators started to have conversations, and they came up with this concept of open banking. So in this open banking regulation, it involved the 9 most important banks in the United Kingdom, where they forced them to participate and to follow this structure, this regulation, in order to share data with fintechs, create this collaboration, and to utilize the different security and data structures, et cetera, to be able to do that. So we talked a little bit about it. This is all about being able to have the customer at the center of everything and to be able to maximize that data in order to create these products and services. If we go from 2016, when it all started, and that's when I first participated, all the way to 2020, it was clear at that point that open banking is considered the biggest revolution in the financial sector by far. It is the biggest element or movement to have really come to play, even greater than the credit card or the debit card or anything else. Here's another important fact that people need to understand is that people say, well, show me the benefits of open banking, and how come I don't see really anything happening? And open banking really, if we look at truly the actual go live dates of 2017, 18, we're only talking about 3 years of its implementation. Do you know how many years it took for the credit card and the debit card to actually become mainstream? It took many, many years before we actually saw a single product become a common household item. Open banking is not a product. It's a movement that could contain hundreds and hundreds of products and services. So for people to be able to expect a quick ROI or a quick opportunity or show me the millions of use cases, I think people need to understand that this is a movement that is certainly a revolution in itself, but at the same time, it's going to require a change of mindset, which is already happening, to be able to get to that point. So having said that, it will never happen. Yes, it will. And here's the reality of it. You take a look at this map. Look at all of these different countries where there is something already happening, from the very light blues to the dark blues, where there's actual implementation or regulation stipulated or some form of action. We can see that open banking is definitely a reality. The conversations are happening worldwide. We're participating. My company is participating in conversations with regulators across the globe, with financial institutions that would like to start their appification programs, their transformation programs. We're helping them to monetize, to commercialize the opportunity. There is a vision and an understanding that this is a question of time and not a question of if it will ever happen. It's just a matter of how quickly and how, when will it come to your region or country, et cetera, et cetera, et cetera. So very excited to see this map. I believe that it's probably already outdated. We probably already have to look at some other conversations that continue to happen. And again, very exciting to see this continue to turn blue and into the dark blues. So why do we have to go into open banking? Here's the issue sometimes is that when I talk about open banking, I talk to bankers, I talk to people in the financial sector. How about if we really took a look at open banking as a consumer, right? So just put that hat on for just a second. Let's look at this. To give you some numbers, and this is pre-open banking in Brazil, pre-open finance in Mexico, and pre any kind of conversations of open banking in Chile. 82% of all assets were dominated by 5 banks in Brazil. 82%. In Mexico, 75.1% of all deposits are dominated by just 5 banks. And in Chile, 66% of all of the utilities of the financial sector industry are dominated by 3 banks. So we have a problem here. This is exactly the reason why we need open banking, because we need that element of what we're saying on the right, is that there is a lack of competition in the sector. We need more competition. We need to break traditional banking. We need financial institutions to understand that they need to be more agile. They need to be more alert to the needs of the consumer, instead of the consumer looking at banks for those vast products and services. A different type of consumer. Volatility in the different markets affects foreign investment. This is another big problem. Do you know that in Mexico, for example, when open finance was announced, in 2018, hundreds of companies worldwide opened offices in Mexico, if not thousands. The fintech community boomed in Mexico. There was such an explosion of neobanks and challenger banks that occurred from it. And because there's open finance in Mexico and not open banking, which I'll talk about shortly, there was an explosion of opportunities of products and services because of the ability of looking at multi-sectored products and services. Very exciting what happened in Mexico, and I'll continue to talk about it later. I talked about 9 financial institutions in the UK. In Mexico, because of open finance, it's a 4,000 plus institutions that have to adhere to the regulation. And lastly, again, if we look at the loyalty to the big brands, this is changing, and the lack of information and trust, which is definitely changing. So why is this important to consumers? Let's look at these numbers for just a second. And in looking at the consumer impression of open banking in 2016, over 74% said they would not share their information with a TPP. That number has now changed to 78% of consumers would consider banking services offered by a fintech. And I said this earlier. So what a shift, right? From just a couple of years. 81% of consumers would be willing to share their data with a TPP in order to access financial products and services. That means that there's 81% of us that are willing to share information with a fintech in order to access financial products and services. Now, remember, not only do we look at the banked consumers, but also the unbanked, people that have never been able to have access to financial products and services. Open banking will give them that opportunity to be able to access that, because now we have fintechs thinking differently than a bank and being able to be creative in how we create products and services. So what are the potential areas of growth for open banking? Well, here are the primary ones: is account aggregation, to be able to see multiple accounts in a single API, in a single app. Analytics of expenditure. So using a personal finance manager, you can see all your different expenditures. Use AI to be able to come to different decisions. It just creates a different view. And of course, comparison of financial products. And this is something I'm very passionate about, is we need to take a look at making screen scraping disappear. Screen scraping is definitely the one element of which open banking regulators want to make disappear, because screen scraping does not provide us an actual true comparison of products across the internet. I have nothing against screen scrapers. All I'm saying is that they only can provide you the information that's available on the internet. But if we don't have a standardized way of showing that information, then you as a consumer may not be getting actual information or correct information, detailed information the way you should. And lastly is payments. This is a huge opportunity for growth. I hope you took a look at some of the numbers on the right, primarily the first one, where the value of open banking is deemed to be by 2032 worth $9.43 billion. And that is looking at unicorns, opportunity, payment structures, all kinds of different things, and big techs coming into the open banking world. So let's talk about the UK, because this is the one country that has been involved in open banking the longest. So we have some numbers to show. So if we have to measure success, let's take a look at the graph there on the right, which I think is really, really important. If we take a look at from August of 2018, there were approximately 4.3 million API calls. Now, an API call means that a fintech made a call, a technical call to a bank to say, excuse me, I'd like to access this information. And every time that there is an interaction between the two, it's called an API call. If you take a look in 2018, meaning that there was already a good year and a half of the implementation of open banking, we had 4.3 million API calls for the entire month. But if we look at August of 2021, we had 771.6 million API calls. So that tells you the growth, the actual exponential growth of products and services that are starting to be created that utilize these API calls to extract and pull data to be able to give us consumers a better service. Some of these key performance metrics, again, very important, especially for those people that don't believe or have issues in believing in open banking still. I like that last number, 1.46% of failed rejected API calls. That means that this information, the uptime of these apps, the uptime or the availability of these APIs is so incredibly high that we only have such a small number of actually failed or rejected API calls in a whole span of time. Very, very impressive numbers. So let's go now into chapter 3 and open finance, time for full consumer benefits. And why do I say that? It's because open finance, we need to understand what it is, right? When we talk about open banking to open finance, we're talking about moving from banks to multi-sectored access to financial products and services. And this is exactly it. Open banking has set the pace, has put in the structure to allow for us to have open finance. So what does that mean? Is that it enables us to be able to have view insurance information, our investments, our assets, all of our different financial products in one single app, and to be able to make multiple decisions on each one of them. So what are some of those differences? I divided them here between consumers and SMEs or even banks. So it allows you to be able to compare products across different sectors. Like I said, insurance, investments, multiple bank accounts. It allows you to be able to have those personal finance managers and to be able to see not only the account aggregation, but also to be able to look at investment portfolios, to look at your financial position, that we've never been able to do that before. Cross-sector access, which will allow for easy transfer of funds, renewals, and a broader decision on our financial products held. So this means that I can take a look at my financial position and make intelligent decisions on how I want to be able to further my position in a certain asset, or just how I move money, how I make payments, where I take payments from. So it just gives me that visibility and more control of my financial footprint. And it also means a better access to credit, because it allows to not only show real-time cash flow, but it allows financial institutions to have a realistic view of your financial position in real time. Very important. So if you look at an application for a mortgage, that may take you 2-3 months to get approved. By that time, your financial footprint may have changed considerably. You have to produce 6 months worth of bank statements. Well, why? Here, through open banking, you can see that instantly, be able to see exactly what your payment behaviors are, and be able to do that in such an easier way across all your financial footprint. For SMEs and for banks, it's about faster eligibility checks like the ones I just mentioned. It's about affordability and credit worthiness instantly. It'll be able to easily and more accurately be able to gauge our clients and be able to see where, be able to take a look at our risk assessment or risk appetite in a much better way. And immediate access to historical transaction data. Again, very important. We don't have to wait for this paperwork. It's an easier access. And these are only some of the benefits. Some of the other benefits we're talking about is, again, I talked about CX, BX, which is customer experience, business experience. And here's where businesses are starting to realize that they can actually also receive the benefits of open banking because they're consumers themselves. So here's where open banking, and now moving into open finance, banks can benefit from these multi-sectoral offerings and be able to take a look at and be able to access different information that they wouldn't have been able to by having a single track of access. So some examples of what we can do with open finance. Like I said, I'm going to be talking from left to right. Apps that provide a single view into your entire financial footprint, like I mentioned. Making better purchase choices based on current financial situation. So if you wanted to buy tickets for a concert, you may be able to go into your app, and it may be able to tell you where you're better off financing that through, which account you have funds in, which ones are, there's different payments that you're going to be making, or where you're going to have money coming in. So it's a better decision making as to what you can do. Comparing and switching utility providers, and may be able to give you better access of comparison of utilities and other services. Move money to best interest rate available. So this is another cool feature. This will allow you for either you do it or it's automatically done by, let's say, an app provider that says, we're going to be constantly looking at the financial sector. And if we find that there is a better interest rate, we're going to shift all of your, or whatever product, let's say you have a credit card. So this is the second feature, automatically moving to other credit cards with better overdraft fees. So let's say you have a debt. It would be able to manage that debt and quickly move and allow you to have the best possible interest on your debt automatically, or potentially, by showing you and giving you those choices. And lastly, move money to best interest rates available, maximizing return on savings or debt. It's about looking for the better options for you. So these are only some of those examples. So what no one wants to talk about. So let's talk a little bit about the unbanked. This is the elephant in the room, and that's why I put that picture there. It's about the unbanked. In the past, in traditional banking, nobody talked about the unbanked. They've always seen them as these high-risk individuals that really no one wanted to talk to, which we didn't want to really offer services to. But here's the thing. Open banking and open finance will finally allow for people that have never been able to access financial products to actually now start having access to these products. How? Because it's fintechs being able to create and work with and collaborate with fintechs, big techs, financial institutions, but also with open finance, cross-sector retailers, etc., to create together certain financial products and services that will allow the unbanked to finally participate. It's also about helping people that maybe are not necessarily unbanked, but maybe are remote. We're talking about farmers or other people that are that live far away from a branch, and it would just be too costly for them to come down and come to a branch or an ATM. This open banking, open finance will allow people like that to benefit from new products and services through fintechs that will serve the unbanked and serve people that are having issues having access to current banking structures that are either costly or just timely impossible for them. Finally, where do we go from here? What's our next horizon in all of this? So open finance is the next logical step from open banking. We talked about that. We talked about how we went from banking to multi-sectored open finance. Such a great opportunity, and so many countries are looking into this. Like I said earlier, Mexico is the first open finance country to go directly into open finance, which is very brave on their behalf, but they are certainly reaping the benefit. And some other countries like the UK is already starting to talk about moving into open finance. So it will make the customer, both banked and unbanked, even more centric. So these are the next step. This is the future. It will create even more competition in the financial sector. I think I mentioned that, and will definitely increase the number of fintechs and their offerings. We're seeing continuous boom of fintech communities around the world. But the next logical step is open banking, open finance, and finally open X, which hasn't really been determined what that means, but those conversations are already happening. What that means is that we're not only talking about now banking, multi-sectored, but now we're talking about simplified cross-border services. That means that we can now utilize our open banking, open finance services from one country to the next seamlessly. It's about unified regulations. It's potentially about unifying regulations to create a centralized region-based, possibly. Let's just say if this was an African initiative where the South African regulation and the Nigerian regulation were equal. So that means that anyone operating in South Africa could operate seamlessly in Nigeria, either a B2B or a B2C, or regardless of how that occurs. Single point of entry. So again, it's about being able to come into one single point of entry and have access to multiple countries, and universal standards. So it's about being able to hopefully, and this is something really important, is let's stop reinventing the wheel, people. Let's use our international architecture and standards that we already have out there. Why recreate ISO 2022 when it's out there? Let's unify and use those standards in a universal way so that we're all speaking the same language. So very, very simple. So some of the opportunities here are some of the products and things that are occurring at the moment that are really exciting when we look at the future of open banking and open finance. It's all these different aspects of being able to use real time to make decisions. AI is playing an important role in open banking, open finance, is utilizing AI to help us to make those financial decisions so we can implement AI into some of our open finance features. All these automation into payments and invoicing, correspondence, remittance. There are so many things that are happening out there that are truly the future of what we're doing, specifically around payments. I keep emphasizing that. But the other piece is about our B2B experience. It's about more and more corporates, SMEs are understanding or are being catered to give that same open banking, open finance customer experience, but to a business of any size, right? So something else that's really happening in the world is about trying to bring these services also to businesses. So I really hope that, again, in summary, or to try to wrap this up and hoping that this has been important for you, is that open banking is here to stay. There's no doubt about that. Open finance is the logical step that will further provide offerings for consumers. Undoubtedly, open, whatever that should be, will finally create true social and financial inclusion, whether that's through open banking, finance, or X. It will certainly be able to further enhance the social and financial inclusion component. And remembering to understand our client, remember our customer. Today's generation insists on products and services that are real-time and easily accessible, and that is only going to be more in the future. That again, the days of bricks and mortar branches are way gone. As we look at our current generation and future generations, again, having this information in our tip of our fingers, it will become even more important. So this is the greatest revolution to the financial sector, as I said a lot of times, and let's not try to fight it. Let's really embrace it. It's time for traditional banking to disappear and to really look at how that collaboration will work. My fear is that if those traditional banking structures don't change, we'll lose what we know today as banks, and we'll just have banks as a background process and fintechs being at the forefront of all of those services. Not saying that there's anything wrong with that, but it would just be a shame to see financial institutions not want to innovate and be part of this cycle. I really hope you found this useful. Thank you very, very much for your time. I wish you the best, and I look forward to looking at your comments, or if you want to reach out to me, I'm more than happy to do so. So again, thank you very, very much, and have a great day. Bye-bye.
Thank you, Carlos, for a wonderful masterclass, and to the audience for engaging with the topic. If you are interested in learning more about the topic, CFTE has created a world-leading course, the Open Banking and Platforms in Finance Specialization. You can receive an exclusive 20% off the course. Simply remember to scan the QR code on the screen or follow the link sent out on the chat. And if you are a Singapore citizen or permanent resident, you are eligible for a 90% IBF subsidy. Have a great rest of the festival and happy learning.